everyone, and welcome to this episode of the Great Identity Debate, where we discuss some of the topics that are on top of the mind for everybody in the identity, fraud management, fintechs, and payments professionals. So these topics have been selected based on our discussions within the industry leaders across the globe, and I'm looking forward to an awesome conversation with all of you today. I'm Cadu Merlin. I'm the VP of Sales in CAF for Brazil and Latin America, and I'm here to discuss today's topic, the rise of everywhere e-commerce. And I'm joined by experts here with deep and diverse experience across financial services, fintechs, tech platforms, social commerce, and identity across the whole globe. Welcome, Gagan, Jim, Susan, and Tina. Prior to getting started, guys, a few logistic reminders. So we have muted the audience during the discussions, but please type in your questions anytime during the session. I can get this and include all these questions on the discussions. If we run out of time, we'll respond to these offline. So, guys, why don't let's start it with some of the introductions. Ladies first.
I think
Who'll
I'll go
be the
first.
lady?
There we go. I'll go first.
Come on, Gagan.
A little bit. My name is Gagan Seiko. I'm a product manager at Upgrade. Upgrade is a fintech company that does lending. It has credit cards. It has deposit accounts as well. We have the highest yield savings accounts, actually 5.07 at the moment. We're also going into the BNPL state in the BNPL market as well. So you can imagine the different types of fraud we end up looking at. And given the BNPL market we're going into, e-commerce everywhere has been a hot topic that we're looking at this moment.
That's nice. Thanks for being here again.
I'll jump in. Hi, my name is Susan Barton. I'm a director at EY based out of Milan, Italy, but I work with payments companies, banks around their payment systems throughout all of not just Italy, but all of Europe. And I'm glad to be here.
That's right. Nice to see you here.
Hi, everyone. My name is Tina Van Brent. I'm with Mythical Games. I'm on the merchant side. Been in the gaming industry for about 13 years now, and I've been mostly responsible for payments, fraud, and compliance. Excited to join the discussion.
That's amazing. Welcome, Tina.
And then
Jim.
Yeah, least and last. Jim McCarthy, I'm an EVP at sales and product at Thread. Been there going on about 7-8 months now. Prior to that, by the way, and we're an issuer processor, so we're in the payment space, primarily prepaid and debit cards around the world. Prior to that, I was at Visa for 19 years in various roles, head of product globally, ran the U.S. sales operation, and my last role was innovation and partnerships from about 2014 on, starting things like Apple Pay, Google Pay, the push payment rails, et cetera. So happy to be here. Looking forward to the discussion.
Guys, that's amazing. I'm really honored to be with such specialists here. So guys, let's kick off the discussion with the first question here. So. You guys, what are some of the trends you're seeing in the market right now that are transforming the world of e-commerce nowadays? I mean, how has customer behavior changed within these last 5 to 10 years? Jim, do you want to start?
Sure, happy to. So. I think what we're seeing is number one, e-commerce continues. I mean, so it's been around 20 plus years now that e-commerce has been mainstreamed, and it's incredible to me that as we sit here today, the vast majority of e-commerce experiences are still full of friction of all sorts. And in some cases, it's for obvious reasons. I mean, there's still a lot of fraud through these channels. Fraudsters are always kind of one step ahead of the mainstream. Some of the smartest people are in fraud, and they continue to exploit the weaknesses that are there. But I think the industry's approaches to solve for that have often been heavy-handed. 3D Secure, which I'll take credit and blame for being there in the early days at Visa, rolling out that standard. continues to plague, quite frankly, e-commerce around the world. It's right-minded, but the approach is often unwieldy and kind of flies in the face of the experience consumers want. So, it seems like always we take one step forward, two steps back. E-commerce and mobile commerce, and post-COVID or during COVID, are kind of became lifeline services, and yet, as we sit here today, the experience in some ways is more balkanized than ever. I mean, the choices in the checkout are confusing. Where the transaction goes, what are the consumer's rights, what are the merchant's rights, what to expect as a consumer, the wallets that we have, all over the place. It's probably in some ways more confusing and not well engineered. So while on the one hand, like I said, it's the way the vast majority of consumers shop, especially post-COVID. You would think it's gotten better, and I'd argue in a lot of ways it's become more confusing and more difficult than ever. So there's still a lot of room for improvement. In a lot of cases, it's back to the point of this discussion. Identity is at the root of it, because there's not good identity. You end up with these heavy-handed approaches to try to solve for it, which create a lot of friction and probably a lot of abandonment.
I agree with Jim completely. And yet I'd also say that there's a bigger trust in the system. So there's a lot of fraud risk out there, but that old phrase, cash is king, is no longer the case. Cash is no longer king. Worldwide, we can continue to see a decrease in people using cash. There's a lot more trust in the system and in companies holding that financial data. And it's not just banks that are holding that data. We're giving that trust not to just the banks, but we're giving this to all sorts of apps. I mean, I used an app to order a taxi last week, and I didn't have to authorize a payment. I was able to just get out of the cab, and that was it. There was an embedded payment within the app that I had previously authorized. And I think that trust comes from me, but it's coming from a lot of clients. People are not just using cash, they're trusting the system.
Thank you, Susan. No, I wanted to go back to what Jim was saying originally. So thank you, Jim, for taking the blame for 3DS, because that is one of the things that I end up encountering a lot. There's fraud solutions that are out there that are very heavy-handed. And given the space we're in, growth is actually being hindered sometimes with the fraud solutions we have. And that's why anytime I speak to anybody, my answer is I'm a growth-minded fraud product manager. What does that mean? Customers come first. Whatever fraud solutions I want to put out there, they need to be reducing friction, not causing friction. We know fraudsters will find a way around whatever solution we provide. For example, for account takeover, login, people can do MFA via SMS. They can easily social engineer somebody to get that back. Like
totally.
What we thought were like solving world hunger kind of problems, solving fraud forever. The fraudsters will find a way around it. So we have to keep on innovating and finding more solutions. However, it's a double-edged sword at the same time. Customers don't want to be tracked. Like Susan, I appreciate you that you trusted the authorization. Most users are like, no, I don't want you to know where I'm going when you have a direct conversation with them. But at the same time, they want to have the experience that Susan had, taking the cab and not have to worry about anything. So it's kind of like, how much do you disclose to them? How much do you authorize? And making sure that they understand what they're authorizing and what will happen later. Some of these charges, when they come up, users might not remember what they are, and they will start disputing them. How do we provide them the evidence? Like, hey, you trusted us, and this is the identity check we did on you. You did authorize it. So there's multiple different factors to e-commerce everywhere. Identity, of course, is at the root of it. It's like making sure that these are not stolen financials, like Susan is who she says she is. It was her card. And on the payment side of things, did we make sure that we had proper authorizations before we moved on?
Makes total sense. And actually, we'll get through this during this panel about the everywhere e-commerce, all this stuff. It's a good comment, Gagan. Tina, any comment on the trends, but also challenges and issues?
Yeah, no, I think piggybacking off of what Gagan said, I think we need to find a good balance for the user of how much friction is acceptable friction versus how friction-free do we want to make it for the user in order to make the ease of payments better for them and faster, frankly. And it's really an interesting topic that Jim also brought up that, around COVID and some of the things that came out of there. I mean, COVID, the pandemic, really drove people online. Some people that hadn't been online before. So my mother-in-law, my father-in-law, for example, who were not purchasing online, and now all of a sudden they were forced to purchase things online, even from their grocery shopping, they started doing online. And so you have a whole new set of customers here potentially that have never used the internet before or used payments before. And so it's a learning curve for them as well. So you have to make your payment flows easy for all users. You want to try to make it as friction-free as possible, but you also want to protect yourself and make sure that you're reducing the amount of fraud or risk exposure that you have through, that ease of payments. So it's, I think, finding a really interesting balance here. And just another comment too on, the rise of everywhere e-commerce. Just wanted to make a comment on the merchant side. One of the things that I've seen kind of coming about now in recent days is the use of orchestration platforms. So that's something that I've really been pursuing here at Mythical Games. It's really made it easy for us to implement different payment types with ease. So we're able to service our customer and provide, the payments that they want and that they're asking for, that's easy for them. And it creates a really easy process for us to be able to onboard those payments.
Total sense. Balance between approval rate, fraud prevention, and conversion rates, right? So that's UX, all this stuff. And Jim, since you started this, and I think it's I would be glad to hear more from you. I mean, how have concepts like embedded finance changed e-commerce? I know you have a great overview to give us on this sense.
Yeah, look, I mean, it's a funny world we live in. We're all payment specialists. I mean, everyone on this call has a point of view, probably based on where they worked and where they've kind of literally sat in the ecosystem. And I think the historical world of payments has grown up primarily, especially if I think about kind of the Western Hemisphere, based on historical kind of bank models of deposit taking P&Ls and lending P&Ls. And payments in my career, going back even to my IBM days in the late 80s, early 90s, the banks didn't think about payments as a profit center. It was quite frankly a cost center tied to the deposit taking business or the lending business. And if you think about commerce from history's perspective, it's always been in any commerce transaction, payment was the place the transaction got consummated, regardless of the method. And yet, because of the way information technology was rolled out in the 60s, 70s, 80s, et cetera, it was a re-engineering of workflows, the classic workflow model. People went in and looked at the way paper moved in an organization, and they coded to it. And even as we sit here in 2023, the vast majority of e-commerce or mobile commerce is still orchestrated, if you will, based on those models. And what I mean by that is, I'll go back to, the 70s and my mom walking us up and down the aisle behind her as she's grocery shopping. And, she basically picked and packed, threw it in a cart, got to a line, queued, put the cart, on the conveyor, it was rang up and paid. And e-commerce, to a large degree, still works that way today at most merchants. I may do search to purchase, but the search lands me at a merchant. The merchant kind of has me walk up and down virtual aisles. I fill a cart, I go to a checkout, I give the information, and then I check out, and it's all serial. Now, not everything's like that. I mean, clearly you go back to Amazon, who was the first merchant in my career that actually rethought this with one click. But there's still a lot of merchants that haven't gotten there. And then Apple Pay kind of re-architected that in a general sense, because they were able to pull the payment out of the checkout. And you can see Apple Pay right now up kind of at the goods. And they actually also, because of the way the tokens got bound, there is some identity on the front end that actually takes some of the friction out we've all talked about with respect to fraud. But the vast majority of the world is still not wired like that. And so to me, embedded finance is the natural, is the culmination, or it's actually in some ways the circle where we go back fully around to how commerce should take place. And if I have trusted buyer supplier or buyer merchant relationships, and we come together to make a transaction, that transaction should be relatively friction free, and it could occur anywhere, in terms of in the merchant site or mobile or e-commerce. And to me, embedded finance is just the kind of a, for lack of a better way to describe it, the duh moment. Like, yeah, of course. I mean, every finance is embedded. It should be kind of right at the heart of any good e-commerce or mobile commerce, or quite frankly, any commerce relationship. But like I said, oftentimes it's thought of a serial thing. It's like, I'm going to build my website, I'm going to build my checkout experience. And then I got to think about payments. And so I think the best experience are those that think about it always as part and parcel of the overall relationship of whatever I'm doing.
Jim, thanks a lot. Thanks a lot for this overview. I knew you were the guy for giving this for us. So thank you so much. Guys, so maybe let's then jump to talk about fraud prevention, right? So what are some of the challenges in securing embedded payments and keeping them free from fraud? Gagan, Susan, Tina.
So having been on both sides of it, like when I'm doing lending, it's collecting payments at that point, or when we're doing BNPL, we're actually the payment side of it. There's fraud from both sides. Anytime I'm thinking about how embedded payments cause fraud for me is, from a merchant perspective, a given transaction could be stolen financials. However, from a payment perspective, it could be a stolen identity. So suppose I steal somebody's bank account details, and I create my own account on merchant, and I add that stolen financials information there. The merchant rules that will run will be stolen financial rules that need to prevent it, whereas the payment side of things need to be stolen identity. So how do we make sure the two things mesh together? The answer is everybody needs to do their own checks. It's like when you do laundry. At the end of the day, when you're using the dryer, who's the person who needs to clean out the lint? The person who's going to use it next. Never assume the person before you did the fraud checks. Do your own fraud checks for one simple reason. It's not just that somebody else might have done them or not done them. They might have done different checks than the ones that you need to be able to do to be able to secure the payment correctly, secure the transaction correctly as well.
I mean, I have to agree with you, Gagan, on that. I mean, I think you hit the nail on the head right there, is that you need to do your own due diligence, wherever you are in that chain of events. Very important to know who you're transacting with, whether it's, from knowing your customer when they first onboard into your system, if it's around those payment details. In my case too, we also have a marketplace. So, if it's when they're exiting funds. So there's a lot of places here where there's vulnerabilities. And I think doing your due diligence and making sure you do your own checks is super, super important.
Agreed. And to Jim's point, merchants are trying to make it frictionless. So what I've noticed that they'll do is they won't run the payment fraud checks. They won't check that this payment belongs to the person who's doing it. They'll skip the AVS check on debit card and credit cards. Or they'll skip the account ownership check on the bank account. So as a result, the stolen financial stuff is a stolen identity on the bank side of things gets skipped because they're like, hey, we did our checks. We made sure we did our KYC. Oh, we don't need to do anything. We need to make sure the payment goes through. They're not, to Jim's point, they're not paying attention to the fundamentals of that transaction, which is the payment that needs to go through, and hence they allow fraud in.
Fair point again. Susan, any comments on this?
I guess I would just flip. I totally agree with what both Tina and Gagan have said, which is everyone needs to do their own checks. But I guess this is looking at it from the merchant side, right? If we look at it again from the customer side, I mean, I would just point out that there's really different regulation happening in, for example, Europe compared to the United States. So in the US right now, there's still a lot of responsibility on the merchant. So if the customer needs to contest a charge, they say there was fraud, a lot of that will rest on the merchant. In Europe, this is really, really resting on the customer. So if a customer finds fraud, the customer is still responsible for that charges. It's the customer who needs to go and contest everything with the authorities. And so because those systems are so different, you see really different approaches from the customer side.
Yeah, and let me just jump on what Susan said. The interesting thing to me is, again, everyone's got their own point of view. I talked about the silos and how things have grown up from an IT perspective, but then in the world we live in, there's a bottom line focus, and merchants want to look at the cost of acceptance and try to drive to the lowest cost. Consumers are oftentimes they don't understand the cost because it's either opaque or that they don't care, and so to them there's no, the choices are all equal. But in a world where we're moving to pay by bank and account to account, it's really interesting. We've seen it in the UK. You're starting to see it in the US, where that may be a great transaction for the merchant because it's good funds. The money's moved. The fraud's disappeared, so to speak, from the merchant's point of view, and it may be low cost. But to the consumer, now all of a sudden my money's gone. I've not gotten the goods. We're talking about remote commerce where you can inspect the goods. They may not have arrived. And now it's a whole new game in terms of, who do I trust? And in some ways, this could run very much backwards. And we've all seen it, where, we all know, get the warnings. There's a lot of friction before I move the money, saying, hey, are you sure you want to send it? And, and again, we're talking about e-commerce. And so in that vein, even if I send it, we all kind of forget about things that fall outside of this discussion, but they're part of the transaction, like logistics. And just to give a quick little story, I sent money. I found an item on the internet that was hard to find. It was literally something that was like sold out everywhere. And I found a legitimate merchant in Australia. And they wanted me to send the money. I sent the money because I trusted the merchant. So I sent the money, he got the money, and he shipped the goods. But I'm moving from the Australian market by FedEx, by the way. It cleared customs in the United States. I had to check with FedEx to get it cleared, filled out some forms. But by the time it got to my house, it was a bag of IVs, medical IVs, not what I ordered. Because someone knew what was in the box and slapped the label on a different box and shipped it to me. So after all that, I sent the money, the merchant sent the goods, but even in all of that, fraud still occurred. And now as a consumer, I've got to figure out how do I get my money back, or how do I get the goods? So this is even bigger than this. So everyone on this phone and everyone that is like a good actor in the payment space, you can still have these things happen, and it comes back again to the overall view of what happens in a transaction, and sometimes it's even bigger than the payment.
And Jim, maybe doing a deep dive on it. Maybe that's the question, right? In an environment where customers can purchase on any platform at any time, how do we manage identity and fraud prevention?
Well, I think if we could answer that, I think we'd all be rich. No, look, it's and I think it was Gagan said it earlier that it still will be a multi-layer and multi-party kind of orchestrated activity. When done well, it's kind of magical. But obviously we haven't talked about AI. A lot of this will be who has the best data set and how they can apply it to the transaction and take the friction out. Because if I'm getting a lot of data, the IP address, the geolocation, all these tags, everything you can put into the transaction history, tenure data, devices, I should be able to theoretically lower the bar in terms of the, what I need to ask of the person or the merchant in that transaction. But that runs counter to what's happening with the regulators in terms of GDPR and other things, where they're trying to strip the data out and giving the consumer, if you will, more control over what they give to people. And the average consumer doesn't know how that could play through this. So identity is critical. And even in the account to account, which I find really interesting, is, the consumer is authenticating to their financial institution, possibly in a very strong way, because I'm going through a front door and you can ask a bunch of questions before I send the money. But the counterparty risk isn't the same anymore, because in the card space, you had the acquirers who, at least in theory, were on the hook to make sure who they were onboarding to the payment rail was authenticated and authorized and underwritten. In these days of push rails, you don't have that counterparty. Yes, they may have a bank account, but that bank account may disappear by the time you've got a dispute. So we sit in a very interesting time where these things, like I said, are opaque. Identity is critical, but it's not just consumer identity, which is where everyone always focuses, but it's the counterparty. Who are they? And oftentimes in consumer to business e-commerce, it's like I mentioned before, an unknown buyer-supplier relationship, and you've got this kind of bridge that we're crossing when the transaction's occurring to say, do I trust each other, and what are the conditions in which I'm going to give you money and get goods?
Total sense, Jim. Susan, Gagan, Tina.
So It's an interesting question. Here's the thing. KYC is a regulation thing in the United States. You have to make sure you know your customer. But can we know everything about them? It's a bit hard. I was actually having this discussion yesterday with a marketing professional. They were not able to track where the traffic was coming from, given the restrictions iPhones and others put on it. I just sat there with a smile saying, hey, I work in fraud, so we get access to a bit more data than you do. But it's, again, going back to the original mention of like double-edged sword, consumers don't want to be tracked. They might or might not provide us the permissions that are needed to be able to get the information. What they don't realize is we're not tracking them because we want to know what they're doing. We could care less what they're doing. We care to know you are who you say you are. I want to know if you're doing this payment, if I can pinpoint your location, if I know this is Gagan, she's doing her payment from her house, I don't need to do an AVS check on her. There's very less likelihood a fraudster will be able to be anywhere in my vicinity. But if Gagan doesn't turn on her location data, it's very hard for us to get that information from a fraud perspective. So we have to continue to do more things to augment and build a layer on top of it, simply because knowing everything about a consumer is what would be my dream come true. Like, if I know everything about you, then I can reduce the friction that's coming your way.
But Gagan, well, I agree with you, but I always laugh because that was the early days of the Bitcoin arguments, like people saying, I want to be able to, I don't want to be identified, even though it's not anonymous. They think it is. And yet it's like, well, I'm like, why would I want to use a cash-like instrument over the internet? As I laugh, because these are the same people that then I gave someone Bitcoin and I didn't get any of the goods or services I bought. And you're like, well, who did I give it to, and how do I get it back? It's a really funny argument with some of these folks. I mean, cash does not work well for these remote transactions.
So, Jim, that is why I don't get to participate in these conversations, because if I tell them, it's like, do you have any idea what kind of data we get back on any given consumer? If a regular consumer knew that, even though they think they've denied all these permissions, I'm like, no, honey, I know a lot more about you than you think.
Yep.
But it just, I think it's an American thing as well. At the same time, we value our privacy, but we want our convenience.
Exactly.
Yeah, I agree.
For sure. And I'll just to piggyback off of what Gagan was saying there, around, making do with the information that you have, that's something that we have to do, because if we don't have the full information about the customer, I mean, that's where AI comes in, as Jim was mentioning. How do we supplement that data? How do we augment it in order to get a full view of the user? It also, there's a balance here too, coming back to that whole, balance of how much friction do we add? It's a balance of what is our risk appetite here as well. On the merchant side, what are we willing to risk? Is it more chargebacks? Is it, better authorization rates? Whatever it is, that's a balance that you have to find within your organization and know what that acceptable risk level is.
I totally agree with you, Tina. I wrote an article a couple of years ago written, those who have the data have the power, about how financial services are getting access to more and more data, and really sensitive data. I mean, where people are traveling, when, how much they're spending, what they want to be doing with their money, very, very private things about them when with where they're spending their money. And not just that, about the person themselves. In Europe, we have the regulation GDPR, which allows people to really restrict access to information, or it should allow that. That's going to be augmented in the next 2 years with PSD3, where people will actually be able to go to platforms and see what data the banks and financial services companies have on them and restrict that. But I guess in the meantime, it's a balance, not just on the KYC side, but on what you're adding to the customer. And again, I keep looking at this from the customer point of view, but if you have a customer, they're going to give you access to data if they are getting a better service, something that works faster, they're getting offered things that appeal to them. If that information is being used to then be sold to third parties, if it's being used in other ways, people might feel very uncomfortable with how that information is shared. And so with the data comes a lot of responsibility for the merchants who are using it.
Susan, makes total sense. And Gagan, you said something before that I really want to deep dive in. I mean, as the e-commerce becomes experiential in a way, so rather than just visiting an online storefront, how should businesses evolve KYC, right, into know your everything, and how we keep this balance between, okay, have a good experience, but also protect our privacy.
So I'm going to tag off of what Susan mentioned. What the American e-commerce team needs to learn is from a little bit from the European side of things as well. Use the data that you have for what you got it for. Don't resell it for other things. Like, if I got data on what purchases you make, I want to use it for fraud purposes, by all means use it. Don't then market that data back to that consumer saying, hey, you're buying this much coffee. You're going to freak people out. Like, that's where most of our American consumers come back. It's like, you invading my privacy. It's like, you were given that data for a simple purpose of fraud prevention. Use it for fraud prevention. Just because regulators have not come down on us and told us not to use it or reuse it for other purposes, we should be cognizant about it, because they could come down the same way European regulators have come down and say, you won't even have access to this much data. Or Apple has done that, you don't have access to this data for this purposes. We can continue to fight that fight, or we can use it respectfully.
And the only thing I'll say to that, which is just from experience at Visa. So I agree, the consumer needs to permission these things, and I think transparency is obviously table stakes. It avoids the regulators stepping in. The only thing I'll say about the fraud use case, which I think is goes to the heart of payments for sure. I mean, payments, the whole payment, the reason we're all in business in payments is because there's an arbitrage in this, and there's money to be made in the risk that goes along with making these payments. That said, when I was at Visa in 2006-07, we actually for the first time required banks to give us name and address. And so for those that understand payments, Visa, MasterCard have 16-digit PANs. They don't know who they belong to. The banks do. But when we launched a product, we required the banks to give us name and address. We matched it with 18 months of payment history. So we'd see how that card spent over time. We had a database. We can now match it against name and address. And so what we're able to do is create a propensity model based on how a person spent. And we got merchants to give us, we didn't give the merchants the name and address. We kept that private, but we said, hey, if you're willing to mail a best in market offer to that customer based on how they used to spend, we'll send that. And what we saw was tremendous uptake. And all my point is, consumers love offers too, but they like targeted ones. And it's back to the same discussion, whether it's fraud or marketing. The more you can use the data, the more your permission to use data to create a better kind of magical experience in terms of targeted offers that make that I'm interested in, as opposed to the spam I get. And at the same time, take fraud out. I think consumers would be all over it. The problem is there's lots of bad actors. And so I agree. Permissions and what Susan described earlier in terms of a dashboard where I can see where my data is being used and how will hopefully make for a friction-free, fraudless, and better experience for all of us. But we still have a ways to go.
No, absolutely, Jem. I mean, if that is how I plan on using the data, even like location data I'll be getting that I want to use for account takeover purposes and account takeover prevention. I can say, hey, you can say what location you usually do business from. And if you ever are doing any transaction from outside of that time, outside of that location, we will tag and contact you at that point. This way, the user knows why they're giving us permission to that data. This allows us to do e-commerce everywhere. You can go to any website as long as you're in your house doing it or at your work. These are the two locations you're willing to do it from, but this is what I need the data for. And guys, not just use it for other purposes.
Again, sorry to interrupt you. I was just saying that we have some questions here from the audience. So let me kick off some of them. I think we'll have time for two more. So first to you, Jim. Jim, you talked about embedded payments being the aha moment. What does it mean for the payment ecosystem and partnerships and ultimately customer relationship?
Well, I think in the short term, what it means is those that have the technology, like the rails and the permissions, and quite frankly, the capability to orchestrate this are the winners. So the example I'll give is Apple Pay to some degree, and whether you like it or not, Apple has a closed ecosystem where they're sitting on a bunch of mobile and ecosystem related data. They pulled the banks in, so they're tokenizing cards, and so they're able, as I described, to put a a general purpose wallet and merchant experience together that takes advantage of, quite frankly, the rails are already laid. I mean, they've not gotten really any real merchant acceptance. They're riding Visa and MasterCard rails. They've worked with the ecosystem, the banks and the networks to create tokens that take some of the fraud out. And they've done it in such a way that makes it for a pretty, good user experience. I'd say very good. I mean, in terms of, Face ID, Touch ID, and I'm done. And the wallet has my addresses, et cetera. That's the good news is that there's a lighthouse we can all see now for what good or great could look like. The bad news is it's a closed ecosystem, and regulators and banks and networks are all kind of banging their head against how can we expand this and make this more ubiquitous or allow others to play in that sandbox. So I think the model exists. It's a question of, who are the partners? How does this roll out in a way that doesn't take something that's very good and destroy it? I mean, it's how do you take that and build on it? And if done correctly, right, that solves merchant problems in terms of taking fraud out, taking friction out, getting higher conversions, and hopefully consumers, back to the earlier discussion, I think Susan brought up, trust goes up in the ecosystem. So there are models out there. Have we solved it kind of categorically? No. And I'm speaking really from a developed market perspective. I need to say, once you go into emerging markets, it's a whole nother game. So still a lot of room for improvement. But at the end of the day, back to this discussion, identity is at the key of it, in terms of who do I trust? How do I trust them? How do I know it's them? And once you get to that, I think everything else kind of happens.
True. Identity is the key. I like this sentence. So guys, one more question from the audience here. So let me take a look. Okay, this is a general one. So could you talk about how the pace of innovation is accelerating day by day? Maybe let's start with Susan.
It's a good question. I mean, everyone keeps saying it's moving faster and faster. I guess I would say it's opening up to more and more players. If we looked at e-commerce, it used to need to be managed by a bank, and that has developed so that we have all sorts of PSPs that is now opening up to more industries. In Europe, we're going to see that field. We're moving from open banking to open finance. So wealth asset management, insurers are going to be able to play in this field. And that also means that other sectors will be able to move into that field if they have regulatory approval. This means with more players, things will keep moving more quickly.
Yeah, I have to agree with Susan. The fact that we have more players in this ecosystem now is definitely going to help us. I think I want to go back to the use of technology like AI and how we can use that within this ecosystem as well. I mean, there's a lot of innovation happening all around us, and a lot of it can be applicable to the payment systems. So it's going to be really interesting to see how it evolves and who those players are within that ecosystem that help us through this evolution of payments.
Thank you, Tina. No, I wanted to go back to what Jim had said on how e-commerce was built out. It's the same way when you're doing the shopping carts and going through each one of the aisles. And I don't believe we're going to get innovation until we're able to look at it from a different perspective. So taking inspiration from how things are done in Asia, taking inspiration from how things are done in Europe, in Australia, from other places, and seeing how they've done, maybe even e-commerce, maybe how they've done payments, and try to implement that in our own payment systems, because we already have a one way of thinking. And trying to get us to find a different way and applying it, the answer will be, if it ain't broken, don't fix it. However, if we look at a different location where they've done this before, Europe has done it before, they've done it differently, and it has worked, and try to bring that into US and try to merge it, not change our way of doing things, but try to adapt it to our way of doing things, that will help us innovate, because it will force us to think differently than we do currently.
Well, guys, one more question here from the audience, and this comes from the witchcrafts and world of wizardry, asking for some of predictions, right? So, I mean, what are the predictions you're seeing for the everywhere e-commerce? Do you have any?
I'll jump in just real quick. I think faster, easier, smoother is sort of the way that we're going. So any way that we can make this process friction-free, I mean, this is what embedded payments is all about. And I really think that that's what consumers are wanting. If we can do that for them, then it's going to be a world of difference for all of us. It's just, again, a balance of how do merchants, how do folks on the other side of the payments ensure that it's safe, trustworthy, and risk-free.
I like it. Gagan, Susan, Jim, any
I would agree with
prediction?
Tina. I think Amazon has spoiled us with the 2-day shipping, and sometimes you can get it the same day as well, so faster of anything and convenience.
I don't want to keep shopping.
Yes.
I mean, the easier, people like easy. People move towards what's easier, the easier we can make it for people. But this is exactly what Tina said. I think we're aligned here.
No, absolutely. And how do we make that not just from e-commerce, but also for payments? Anytime I need to make a payment, I've had to do this a couple of times, and usually it's on donation websites. I go to donate something. They are not able to support Apple Pay. They aren't able to pull up the credit card that's already on file on my phone at that point. So I have to go find my wallet, and good luck finding that thing in my room at sometimes. So the easier we can make for people to provide money. So from e-commerce, what Amazon has done for e-commerce, we need to find a way to do that for payments as well. Apple Pay has done some of it, like any websites that support Apple Pay. As Jim mentioned, it knows everything about me, shipping address, billing address, and everything. It just goes. So how do we expand that out from what Apple Pay has done and try to make it better for all payments?
For payments. Jim, I would love to hear a prediction from you, brother.
Yeah, no, look, there are two things that I always kind of think about, and just through my history in the space. So it's all the stuff that's on the adjacencies that aren't jumping out at us as commerce yet, that are the ones that I always tend to watch. So as an example, back in the late 90s, early 2000s, I remember NTT Docomo was the leader with ringtones, and I was like, this was when we all had Nokias. This is pre-iPhone days, and I was like, why are they paying for ringtones and downloads, like little widgets? And, now we sit here today and, everyone's doing micropayments. Back then you couldn't do micropayments. There was no easy way, let alone any way to do it, unless you were a carrier billed. So now we live in a world where all that exists. So I sit here and think about things like whether it's TikTok or even the Meta portfolio of companies still. Contextual commerce, Pinterest, none of this is taken off still. And yet it's begging for a payment rail on all these things, whether it's closed loop or open loop. It's still kludgy, and there's still the trust issues. And yet this is where I don't spend a ton of my time. I mean, unless you put like LinkedIn in the crew, and LinkedIn hasn't figured out payment yet, but my kids and my family, that's where they spend their time and days. And so you think about contextual commerce, why isn't it happening? Well, a lot of it has to do with all the things we described. And then last but not least, we kind of all hit on it from the fraud perspective around AI and, what's going on the Hill and the amount of, stuff happening here. But the concept again of deep fakes in this going forward, it's going to happen. As we talked about to start the call, fraudsters are the smartest with the deepest pockets and spending the time there. And you're starting to see what's happened, obviously, in the music industry and in the television industry. The reason the writers are on strike, they're deathly afraid of being put out of jobs by this stuff. And so we're thinking about it in that context. But it's only a matter of time before it kind of gets into the mainstream of sorts. And matter of fact, this is a deep fake I program before coming here. So this wasn't me. It's my avatar. So.
Man, I love that. Guys, thank you so much for your time. I really learned a lot from all of you here. So Tina, thank you so much. Gagan, thank you so much. Jim, Susan, it was amazing to be here. I think everybody on the audience love it. This was our panel, The Rise of Everywhere E-commerce. Thank you so much. Guys, stay tuned for all the panels of the Great Identity Debate. That's it. Thank you, people.
Thanks all.
Thank you.